Mhm. Well, good afternoon, everybody, and thanks for still being here at 3 o'clock in the afternoon. I'm going to talk about something completely different, and on the first view, only remotely related to issues of financial stability, system risk, and so on. But clearly, this subject that I'm going to give today a little bit of an overview has a huge behavioral aspect in it. So, aspect of how people, agents in a financial market, behave in response to the outside information. And in that respect, I think that actually contributes to our understanding of how the system evolves as a whole. So, although, like I said, in the first instance, it seems to be unrelated, yet I think it actually is quite related. So, I'm going to talk about the role of news in the financial markets. And although lots of what I'm going to say is a work of myself and my colleagues who've been working on this field for the last few years, I will also, because it has been an overview, I'm going to also dip into results of other people who did some work in this field, just to show you, what else is happening basically here. So let's think about financial news. Yeah, well, we of course all familiar with it. We read Financial Times and so on, and we look on the internet. There are websites that gives us all kinds of information about what's happening to the companies, what's happening to the political situation, and so on. So a typical press release would be something like this: lawsuit says GM hid ignition defects in recalled cars. Well, already from the headline, you would think, ooh, bad news for GM, right? And indeed, if you start reading the text, then it turns out it is bad news for them. And of course, you have to interpret it in your brain, read this part, and even if you only read the headline, it would still be a lot of work. So often, indeed, from the headline, you can figure out, so this would be another example. Southwest Airlines report record fourth quarter and full year profit, 41st consecutive year of profitability. And here all the bombastic corporate language about how great it is going with Southwest Airlines. So, well, you think good news for Southwest Airlines, right? And that is indeed easily interpretable for us as humans. Well, the situation becomes a little bit more complex when we go into the area of commodities, so for example, crude oil. So there you would, on the Bloomberg screen, you would see something like this. Crude oil gains despite negative news flow, with a sort of accompanying chart. And then you really have to puzzle yourself, what do they actually say? Is it good or is it bad? What does it mean for the price? And usually you can click and see the commentary on that. And then the other headline would be crude oil to follow stock prices higher. Think, okay, that means the price is going up. And indeed, the commentary would be something like that. But of course, following all this news and reading it and interpreting it is a really, more than a full-time job. I mean, obviously, you wouldn't be able to do it all the time. So now, in the last, let's say, well, less than 10 years, really, starting in about, 2007, 2008, there's been a surge and emergence of artificial intelligence tools for computerized analysis of news. And so the idea is that there are algorithms developed that read and interpret those news messages for you. And what is the basic for it? How do they do it? It's usually based on some well-known, or at least relatively well-known natural language processing algorithms. And sort of the initial point for that is given by the so-called Harvard for Psychosocial Dictionary, which classifies these words in English language as positive, negative, or neutral, and also according to many categories like happiness, optimism, and so on. So this is the outgoing point, and when you use this in a very simplistic way, you just count. That's how it used to be, in a simple way. You count how many positive words there are in a news message, how many negative news, and then you basically come up with some kind of positivity or negativity score. But you see that that's very difficult because well is positive, terribly well, well, that's even better, and not terribly well, well, is yet another meaning, right? So it's not just that, it's the big contextual analysis, which is based on these 3 classification algorithms, which I will not even go to today, because the firms such as Thomson Reuters, Ravenpag, Bloomberg, IBM have departments or hire, big companies that do this kind of stuff for them. So, for example, Thomson Reuters, who is my source of data, that's why I have their logo. They kindly provide me with all this data. They have a whole group of these computer science whizzes sitting in Connecticut, well, not in a bunker, but, in a probably moderately nice villa, crunching those numbers for them, interpreting these millions and millions of news articles. So IBM offering is actually quite interesting, because what they offer is that huge computer that beat Harry Kasparov in chess. What's it called? Big Blue. Yeah, this one. That is the one who interprets news for them. So they provide this kind of offering from IBM. And more recently, the similar analysis have been undertaken again by all kinds of startups and clever companies of social media content, of Twitter feeds. And jury is not out yet on these applications. However, it is already quite well established, the use of these artificial intelligence language processing algorithms by financial companies, but then on the basis of the actual news, such as Bloomberg, Reuters, and so on. So algorithmic trading and event-driven trading strategies has already been going on a lot in banks and especially in hedge funds on the basis of this quantitative information about natural language, about news. So then the question is, of course, if we do have this wealth of quantitative interpreted already for us information extracted from news, what is the effect of those news characteristics, of which there are many, as I will show you, on various aspects of financial markets? So, for example, first of all, the asset prices, and then, of course, other things in the financial markets, such as all kinds of measures of liquidity, measures of volatility. Think of anything else you want to study, but mostly what you think is, of course, prices, volatilities, and all sorts of liquidity measures. And can this be exploited in trading and other applications, such as risk management, but then also order execution and other things? So this is, of course, a huge research question, and there is no way I'm going to answer it today, or probably in my entire career, but still it's a very worthwhile undertaking trying to answer these questions in various aspects and also for various asset classes. Yes?
Do you know how well these algorithms do?
Yeah, I'm going to show you also. Yeah, I'm just going to take my notes because I'm afraid I'm going to forget something. So this field, which I'm going to sort of review for you a little bit today, has different names. It's called also news analytics. It's called machine-readable news. So there is all these names that are at the moment in use. And in principle, they are all based on the same ideas, namely using this Harvard dictionary in combination with contextual analysis. Right, so this picture is the father and the mother of all these kind of quantitative studies in this area. So this is really the first study pretty much in this field, which is done by Professor Tetlock, who is in Columbia University. And so what he did it in a very simplistic fashion, namely looking at Wall Street Journal articles and classifying them as positive or negative for various companies, just according to this Harvard 4 dictionary. And this is the event study that he undertook So this is trading day of the news story release. And there are several lines, but interesting is to see the, let's see, this line and that line. But pretty much they all measure the same thing. And this is the cumulative abnormal returns in stocks, which were mentioned in those articles, prior and after a news item. And then this would be the positive one, and this would be the negative one, right? So what do we see? Well, we see that the positive news is accompanied by abnormal positive return, and negative news is accompanied by abnormal negative return, but the causality is, of course, very tricky. First, you have a price move, and then you have basically the news release, right? So this is, yes?
Is it?
Yes?
So it's this minus 10 in the x-axis. This means like 10 days,
10 days prior.
to the,
Yeah, exactly. This is a
So how
10-day
can we-
window before and
How
after.
can we control? So this is about one ifs, right? One trajectory means.
No, it's averaged. It's averaged over many news items and many stocks. This is a very average picture over many stocks,
But
of
we
which
cannot
there are
control after time zero. We cannot control whether there are any
other news. Yeah, there is a
Yeah.
news clustering, obviously, and it takes. There is no dealing with that, and I will show you.
Long
What?
before this, there was this famous study where Larry Summers was one of the co-authors, I forget the two others. So they looked at the Wall Street Journal
Also,
from the beginning of the century until the date of publication.
maybe,
in
yeah,
the
yeah.
80s. And they looked at all the large price moves.
whether there is
When,
anything.
when the Dow Jones or the S&P moved by more than 5% either up or down,
Mhm.
was there any significant news they could possibly relate to it? And they did it, there was a human analysis there.
Okay.
They have this algorithm.
Yeah.
So
I should see if Tetlock really indeed mentions that.
That study, it's a very famous study, you see it's cited in lots of
Mhm.
papers on market efficiency. They found that most of the time there was no relation, there was nothing going on,
Really?
and the market moved by 5% up or down. So their paper actually concludes that, these are internal market dynamics. This is not necessarily information. What we're seeing is not necessarily information. It can be large trades, something
Yeah.
not necessarily information. So, but here is not distinguishing large or small, and there's no causality.
No, it's just really a very average picture.
But you can
And-
also tell another story. So suppose that a lot of people are adopting these algorithms. So everybody is looking at
Yeah.
news feeds by Bloomberg and Reuters.
That's
and
right.
Paying Bloomberg and Reuters to actually analyze their
Analyze
own
the
news
stuff
feeds,
for
so
them.
charge them twice for the same. And then giving them this indicator, and you use it for trading. So then you will see a correlation, but not because there is some objective, interesting content in Bloomberg or Reuters news feeds, but because you use the metric as a sentiment.
This sounds reasonable, but it's actually opposite of what we see. So going a little bit ahead of myself, when the Reuters, for example, released that product, they backscored the news of 10 years before, according to that. And we looked together with other people at the relationships, right? As they brought it to the market and people more and more started using it, the effects became smaller, not larger, interestingly enough. So what you say sounds reasonable, but there is obviously something else also going on, which decreases the effects as we speak, pretty much. So the actual cutting edge in getting money out of this, at least for equities, is gone. There's nothing else to find, and I'll show you.
Smaller can mean two different things. Smaller can mean that more people are doing this, so you spread out the profit.
Yeah, so I mean, there is no way to generate money in equities. I'm getting ahead of myself here, but let me just carry on, so maybe you'll see some of the things. But anyway, so this is something which started this whole business, according to people who do it now. And then there are several more studies started appearing. And one of the key elements on when this field actually took up was the event in 2009, a conference organized by OptiRisk in London and Canary Wharf, where I was also present, where the academics were invited to come and listen to what's going on and submit proposals and start basically analyzing this thing. And then Reuters and other companies started, basically developing contracts and relationship with academic groups who would then go and analyze this stuff for them. And since then, there are several studies already on the way, and our group is one of the key players in that field, in particularly for commodities. So although I'm going to talk about equities today also, we are pretty much the only ones sort of really looking at it in commodities on all aspects of it. But I'm going to talk about everything today. So anyway, what are the quantitative characteristics of news that are provided to us by these engines? And there are basically three. So, these three are sentiment, relevance, and novelty. So let me start with relevance. So, and every article is first of all being screened at the names of companies and also of commodities that are appearing in that article. And that every article is scored as being relevant or for a particular stock or a commodity, right? So, and every article gets a relevance score. In the different offerings, it's a different way of scoring. But basically, if it says 100%, it means that that particular article is only about that particular asset. Let's say BP stock. If Shell is mentioned, and then it could be, for example, 50% relevant for that and 50% relevant for this. Yeah. So you see it for the stock articles, often many mentioned together, so relevance can range from 100 to 1. But for commodities, it's often, if it's about oil, that's about oil, and that's it. Yeah? So then the most important and most interesting, of course, thing is the sentiment. And that is usually a number between -1 and 1, which could be interpreted as the probability, well, -1 meaning negative, but let's say from 0 and 1, that probability that an article conveys positive, neutral, or negative outlook at the price of that asset in question. And here is a very interesting difference and a great difficulty between interpretation of news for equities and for commodities. So for equity offering, of course, what is positive sounds usually also positive. If you hear great results, profits, it sounds positive, and so it is positive, but it is likely that it will be accompanied by a price rise or lawsuit, panic, whatever that sounds like negative, it probably is negative. Well, for commodities, situation is much more subtle. There, the terms should correlate not with just positivity in a general sense, but with supply and demand. For example, oil rig explodes, sounds negative, but for the outlook on the oil price is actually a positive news, right? Or, calm returns to the Middle East. Everybody's happy and everybody's safe, sounds extremely positive. However, it's a negative outlook on the price. And this is why, while you look at the interpretation of news for equities, for example, for Reuters and also for Bloomberg, which in my opinion is a little bit less tuned, they are still classifying news nearly with 100% reliability. So back to your question, for equities, they cracked it pretty much. They read it and it's either positive or negative. Also, you would classify it in this way, or you think, well, it's nothing, and then it classifies it pretty much as neutral. Well, for commodities, the offering was rolled out for all this. Well, Bloomberg is still not out of the woods how to do it, but Reuters did bring it to the market in 2009, 2010, and have been improving on it steadily since. So, for example, I have to recompute my archive every 6 months because they provide better and better algorithms. And there you can see that there is a lot of noise, there is a lot of misinterpretation. So there will be, for example, 3 news items about certain event and just written from maybe different news sources, news wires, and 2 times it will be interpreted correctly as positive and 1 time it would be interpreted as incorrectly, as negative. So I have here an extract from those news archives, which I probably won't show now, but maybe I'll show it afterwards. I can actually show you the Excel spreadsheet, what it looks like and what fields there are and how you can actually see what it looks like. And then, of course, another very interesting quantitative characteristic is the novelty, namely how many times this press release, this news item have been mentioned before. So if the novelty indicator is 0, it means that's the first time news hits the news wires, and that's when you really should pay attention. And then there is, of course, million of other characteristics like source of news, like genre, article alert, override, whatever. And many other things. All kinds of links you can actually go, like if novelty is 5, meaning that that news was mentioned 5 times, you can go back through the archive and trace your way back to the original one. So that's a really wonderful database to work with, very rich and very detailed and relatively reliable. So for example, I just recomputed my archive in July for commodities, and you see how the interpretive power changes there. So there they use on a lot of expertise from editors, like they would augment this Harvard dictionary and those classification tree with the expertise from the experts, all kinds of terms related to supply and demand in different markets, all kinds of combination of words, so they actually improve on it. But if you look at the news data, then for stocks it's pretty clean, but even for stocks, and especially for commodity, it's a very noisy grade. So for example, like I said, one item is repeated several times and interpreted in a different way. Also, so the sentiment, so it's very high frequency for a lot of asset classes, in particularly for commodities. So for commodities, for example, for oil, there is a constant stream of news, and there are thousands of news per day for oil alone, So and really a lot of it is junk. Is really, you read the headlines and you think, well, this is totally irrelevant. But of course, it interprets it as relevant because oil is mentioned and something to do with it are mentioned. And so the sentiment, so it has very high frequency, and the sentiment grade is very noisy. So it's not just a clean number which says positive, negative. It's between -1 and 1, and if you just plot it, it will be all over the place. It's an extremely noisy signal. Yeah, we think about it in terms of signal extraction, and that's how I'm going to deal with it in a minute. Well, for equities, we have a different problem, and that is not enough news. So even for a very, very liquid stocks on FTSE or in Dow Jones or in S&P, you would have 40 news items per week. Yeah, so now and again something is written and everybody does something, and then nothing else happens. So we need to do something about all these things. So we should aggregate it into some kind of index. For example, aggregating it over a day or over a longer period of time. Or for equities, we can aggregate it over different equities to create some sort of news index, which would then correspond to some sort of price index. And I'm going to talk about that now also. Or better yet, we should filter out a running news sentiment, which we do not observe, but we observe the actual sentiment of news, which would be observation on this underlying market sentiment with some noise. So that's my philosophy. That's how I look at it.
What's the objective here? Because if you suppose you have a faulty index, which is actually poor reflection of information content, but it disseminated to everybody and lots of algorithms trade on it, then it's a self-fulfilling thing. It becomes actually a good indicator. So even if I think it's crap, I will trade on it because I know that there's some computers which react to it. So It doesn't say anything about the actual information content. It says everything about how widespread is the use and what's the market share of that vendor of that index.
Well, I'm trying to devise those indices, and if later on that they are crap but very well used, I'm not sure I should be very unhappy about it. You know what I mean?
Yeah.
So I'm trying to do it in a reasonable and in a sort of signal processing, mathematically reasonable, correct way. But how it's
what I'm saying is that it's not necessarily the case that if your index is objectively more refined, that it's going to have more impact when you test it as TED did.
Exactly.
So the Tetlab test is not about the objective signal processing quality. It's about
It's about
I
the
actually
response.
care about that or not.
Yeah. But there, at the moment, there is no such thing. What is there is a huge database which is provided you in real time, for example, if you pay a lot of money, which simply gives you scores for individual news articles, individual ones. So, for example, for Reuters, it's 59 different sources, Reuters, but then all exchanges, all security and exchange commissions all over the world, and so on and so forth, and raw data is provided to you, right?
Yeah, but
So now the question is
there are
how.
many trading algorithms based on automatic parsing of text. There are.
Yeah, of course. Yeah, definitely. Then and people are of course very welcome to this data. Otherwise, they wouldn't have.
So when somebody wrote this false information on I don't know Twitter or somewhere that the White House.
Yeah. This is why I'm not touching social media yet.
There
I'm very skeptical of that quite right now. And there are all kinds of different issues. So maybe I'll change my mind on this. So here I'm looking really at the news as news are from reliable, semi-reliable sources such as Reuters and Bloomberg. So I do not touch social media here with a barge pole. They have to first figure out to filter the stuff for that.
What Professor Cotter is referring to was a tweet by the Associated Press, so quite a reliable source.
Yeah.
Very extremely reliable. That's why people believe that.
But it
So
was
not
hacked.
qualitative process.
Well, I don't know if that's possible to post as if you are Reuters or something on their newswire.
But that's what they did. They hacked
They
Associated
hacked.
Press.
And nobody knows if this was intentional to destabilize the markets or it was just, a prank.
Well, I'm sure we are not immune to this.
It's something rare, I think.
Yeah. Yeah, that's exactly the
But it
point.
shows
I'm
the
trying.
vulnerability of the markets
S-
to this.
Yeah.
Exactly.
But then this means that
Maybe
people, they are using this news.
Pardon?
But this means that this shows that actually people are using the
Yeah,
news.
people use it. That's what I'm
Yeah.
saying.
Yeah, but anyway, I sort of feel I'm providing some sort of social service by trying to compress this wealth of information into something which, well, you don't have to trade on it if you don't want to, but which gives some sort of measure of sentiment about, let's say, crude oil in the market right now. Yeah, that's what my goal is. And if you want to trade on it or do anything with it, be my guest. And I will show you how is it possible and what kinds of things we can observe. But I'm concerned more in the way of extracting hopefully useful information from these gigabytes of data in a statistically sort of responsible way, and not just the simple averaging as lots of people do. That is what I.
Why did you put it in the public domain?
Because I'm an academic researcher, and because Reuters, otherwise, is giving me this data with that purpose exactly.
They wanted to do this.
Yeah. Yes. So it's completely non-proprietary, and also, for example, the way we extract this running news sentiment is now being implemented there, and I'm going to show you in a very interesting way.
See, but what you're doing has a strong parallel with financial indices.
Right,
So
exactly. It's
financial
very
indices
strong
do
parallel.
exactly this, they
Yes.
take a very complex thing
And they
it in
summarize
one
it in one
number. The
number.
index goes up, people react, oh, okay, so it's
Yeah,
like it's doing
Yeah,
whatever.
you're absolutely right. And I'm going to show you several pictures of that as well in a minute.
But that, okay, yeah.
Yeah? Anyway, so that's just some pictures, some quantitative characteristics, how many news are there. And you can see that, for example, for 1 year, you almost cannot see it, but there are like, for example, for Dow Jones in 2007, for the most liquid stock there would be something like 2,000 news items, which is exactly 40 news items per week, which I mentioned. Well, the situation for oil and for commodities is completely different. And there are hundreds of thousands articles per week, basically. So the challenges in these two domains are very different in terms of language processing, but also in terms of how we think of the news signal that coming from those two markets.
So you said previously that for those things like oil, most of the news that you have is junk.
No, it is not most of it.
Or
We
we
can
have
have a look. We can have a look at the extract from the data.
What do you define as being junk news?
Not price moving news. So it will be indeed relevant for oil. Yeah, I can show you some. Would you like to see an example? Anybody wants to see an example of what it looks like? And then you can try to agree or disagree with me whether it is junk or not, okay?
Yeah, but the metric used, price move, that's what, I don't understand why.
I
it's
don't,
relevant.
no, that's not, it's just my personal experience. I mean, I've been trader in the oil market for several years. And I do have some idea of what would move and would not move markets. So it's a completely personal judgment. It's not. So
It's not a
look,
deadlock type.
no, not that looks like, no. So this is, for example, how it looks like. So this is the timestamp, see? This is the RIC, stock RIC, Reuter identification code, steel, natural gas, grains, here crude, and so on. So here is the unique item ID, but this is relevancy. Often it's just one. And here is the most interesting bit. So these are the three most interesting things, because this is the measure of positive sentiment, measure of negative, neutral sentiment, and measure of negative. These are all the novelty indicators. But then very interesting thing comes, and it's called here, broadcast text. So this is actual headline. So this is the actual headline, and you can see already what it is. So for example, here, so UAE Emirates still get so many billions of loans from the commercial investor. You know, still it's classified as relevant for steel, but I do not think it really is. And you see it's mentioned 4 times because it's, you know, two times an alert, then the actual explanatory article, and then override because they made some mistake. There. Firms to bid for work at Saudi offshore gas fields. Well, that actually is a price-moving news, in my view. Yeah, and we can go back and see how it is classified, and correctly, it's classified as positive. So then there are all kinds of other things here. So Citadel Sudan firm gets so much money for maize planting. Russian patriarch prays for rain because there is a drought in Russia. So you see, lots of it is hard to interpret, but you know, and may or may not be relevant or not. So what I mean in terms of junk, that lots of it is basically, well, probably not price moving, but as taken as overall, you know, it could be, you know, moving all sorts of characteristics of market. Yeah. So then there are a couple of real ones. There, BP prepares to plug Gulf oil well for good. Well, that clearly is important news, right? And you see, it's only mentioned twice, while all kinds of less relevant things are mentioned maybe even more times. So we need to have really good idea of how to process this kind of stuff to come up with a meaningful signal. And I do not claim that I cracked the problem, but it just gives you the sort of scope for work here. Anyway, so here is what we have. You see that Wednesday, Thursdays are busy days for energy because inventory numbers come. And so the whole morning people talk about what they are going to be. Then they hit the market. Then there is a lot of discussion. Oh, but and it is now this and that. So you have to know a lot about markets to actually understand why so much is written on which day and when exactly does that happen. But anyway, so within trading days, this is a very typical pattern, which is indicates, you know, market open, there is some news, then after lunch there is a peak, and then it sort of dies down towards the end of the day. Right. Anyway, so in the beginning there was deadlock, right? Well, obviously there was somebody else even before that, and then this thing started moving, and then, for example, a guy called Leinweber, he has a whole lab in Caltech, sort of crunching numbers for individual stocks. He reported some kind of profitable trading strategies for individual stocks. The problem there being is that there are so little news that when something hits the news wires, then there is some trading and you could probably make some money, but it's just so infrequent, and the risks of those strategies are very big. So, in my opinion, it's less usable than the study actually reports. But on his website, you can actually see a very interesting animation which would, you increase all sorts of windows, you limit the novelty and the relevance and so on, and you see how your results change for different kinds of stocks. So if you're interested, you can look at that. Well, then there's Gross, Klusman, and Hauch reported then very shortly that the profits that you can generate are in fact not enough to compensate for the trading, for the bid-ask spread. So the actual price impact is actually very low. So the evidence is very mixed, but people do agree, and I agree with them, that there is quite a large impact on the volatility and liquidity measures in the markets. And so the very, very simple studies, such as this one, show this very, very clearly. So this is from Gross-Klusman, and so they don't look whether news is positive or negative, they just look at whether there is news. And you see that the volume spikes around high relevant news, volatility spikes in the period of about an hour, half an hour before and after. And then the same happens also for bid-ask spread, for the trade size. And this is actually the sort of the analog of Tetlock picture. So this is the Tetlock picture, only now for not Wall Street Journal, but this Reuters. This is the negative news, this is the positive, and this is sort of neutral. And it puzzles me why there is a sort of hike up when there is a neutral, but anyway, so that's what they see. Anyway, so this is there, but what about commodities? How can we look at stuff there? Well, there we cannot just say when there is a news, then we are going to look at the, I'll continue with my story while the screen sorts itself out. So in commodities, if there are 800 news items a day, you can't look at impact of every single relevant news. So you must aggregate it in some way. And so the first attempt to do it is simply to aggregate relevant news over a day. And a day is close to close, right? Close of the previous day to the close of today, with some weighting, which would indicate that overnight news is perhaps less, playing less role than the news which is released during the opening hours. In the same way you can deal with weekends and bank holidays. So is it coming back now, you think, or? No.
Maybe try
That will get the map.
Because in the previous presentation it was,
Yeah, I just pressed something.
so, and it came back up. But here we do not have that.
Can you click on the mouse?
There is no mouse.
Maybe try taking out the video.
Yeah. Anyway, so let me just carry on a little bit just with the story.
Worst case, you can just restart the computer and then.
Yeah, but that'll take
Try
a
taking
while.
out the
So.
video cable from the computer and put the video cable
This one?
back in.
Oops. Yeah. Technology can provide us with news interpretation, but not with a reliably working screen, is it? Usually on a beamer there's a button you can just press and
There's nobody in the room.
there, yeah, there.
But they told me that somehow you can phone them, but
Yeah, that's what I thought, because usually you can just,
I'll run over to the reception.
Oh, wait, something.
Can I go and
oh, something's coming, great, yay. Yeah, it's coming now. Yes. Excellent. So, anyway, so daily news sentiment, we aggregate close to close, dealing with a very, in a very simple way with weekends and bank holidays. We discount them because people forget stuff that they read on Saturday by Monday. And so we average the 3 sentiment scores, and we also weight with novelty and with relevance. Yeah, so the more novel gets more weight, And you can look it up exact details. And then we do exactly the same study as Tetlock does, but for us now, event is not a news item, but a day which is overwhelmed by positive or negative news about a particular asset class. Yeah? So let's say it's the day where the overall sentiment in the top 10% of the empirical distribution of sentiment so far. So day like this would obviously be classified as a negative event. And then yes?
Could you have 100% positive and 100% negative, or does the sum of the probabilities of positive and negative?
They always add up to 1, and you can see that they are very, of course, negatively correlated. So I think there are a couple of days in my whole data set which are exactly in the classification that you say. So you can do what you can look at, for example, if you average positive, you can do two things, and I will show you also in a minute. You can look at it in a different way. You can look at positive sentiment and negative separately, or you can define so-called net positive, so positive minus negative. And then, of course, the situation becomes easier. Because then, very positive and at the same time very negative will cancel each other out and be kind of neutral. Yeah, so you can do both things, and we do both things and see which works better. Anyway, so then we take a futures contract and we follow the returns on that futures contract before and after such an event. And we consider futures returns that are actually feasible. So we fix the maturity and we go with that. And this is actually a picture which is by now also quite much used and reported. So that's, for example, 2 months WTI futures. And you see that there is a big difference between response in oil market as opposite to the stock market. And the biggest difference is, of course, the asymmetry. You see, the negative news is accompanied by a much, much bigger price move. And I'm not saying leads to bigger price move, because most of it happens a day prior, than the price move that surrounds positive event. Yeah, and for a neutral, this is actually a very well-known futures premium of about 2%. Yeah, so that's also confirmed pretty much here. But the big discrepancy between how market reacts around negative and around positive news is actually staggering, and that's something which is very surprising. And with natural gas, you see that the situation is even more pronounced, where positive news indeed receives some positive momentum, but then it reverts back to as if nothing happened. But negative news, or let's say a day overwhelmed with negative news, is preceded by a large negative price move, but also this persists for at least 10 days in the future, and actually even longer. And this is actually robust to the clustering which you mentioned, that in effect you can say, okay, but I now take an event which is the beginning of such a positive cluster rather than each one of them, and then you can have a couple of percentage points shaved off here, but otherwise picture remains pretty much the same. So this is actually very, well, I think it's very interesting to see that great asymmetry. And another thing, of course, is that news sentiment is, of course, very much correlated to the price momentum. And that can have two reasons: that people know something before the news hits the news wire, but most likely is lots of news is about what happened to the price. Oil dropped $5 yesterday, which is, by the way, true. So this is news about what already happened, and so you see that news move, the price move, and then the news to the effect, describing basically this news. Well, similar effects are observed for many other commodities. So this is, there are actually some situations where we don't have this price asymmetry, and this is, for example, wheat and gold. Yeah. But then there are situations where we do have the price asymmetry. So for soybean, we have the positive news, and then we have the negative news, which corrects, by the way, not so bad as in energy. Well, and there are all kinds of interesting issues here with the commodities. And one of them is, for example, that the fact that commodity price is not just one price, it's the entire forward curve, right? It's the price for delivery in different points in the future. And then, of course, it's very interesting to see how news works through to the curve for the different maturities. And so there are also all kinds of interesting issues there. So, for example, you can actually see that the news effect is much bigger on the shorter term maturities than on the longer maturities. So curve kind of inverts under the influence of news. And another interesting issue is that markets can be in two states, at least energy, that's called backwardation and contango. So when the price now is lower than the price for delivery in the future, that's called contango. That's how, you know, stock indices, stock futures, index futures look like. But then there is so-called backwardation, and that's when the price for delivery now is actually higher than the price for delivery in the future. And it turns out that the markets react, so the oil price reacts to news very differently in those two market states. So for example, just to show you one picture, that backwardation is accompanied by lower news effects, you know, both negative and positive, and contango is accompanied by larger effects. And it's also very robust to the time period, to all kinds of things here. And there is you can think about why that is true. And well, one picture kind of summarizes it a little bit. So it's something that you do not expect. So for example, in contango, you expect prices to go up, but negative news sort of tells you otherwise. So the effect of that news is against your expectations. So it's bigger. But then there is another effect, and namely that's the following. So if the index investors, for example, or commodity futures investors, they hold positions in futures, which then they have to rebalance as futures approach maturity. So for example, let's suppose you invest in 6 months futures, which you then sell, let's say 1 month prior, and buy again the ones that 6 months, maturing in 6 months from now. So if the market is in backwardation, you clearly make money just doing that, no matter what happens to the price, because you buy low and sell high, right? Because the curve looks like that. So you buy here and you sell there. Great. And in contango, it's opposite. You buy high, you sell low, so you lose money, as they call, on the roll. So you're already losing money, so any negative news will exacerbate those losses, and so reaction to negative news is higher. So choose your favorite explanation of those two, and I have no idea why it is one or the other. Okay, but now I'm going to continue with the index, which I already, without even mentioning it, already got some criticism from Rama about. But let me at least tell you how we do it. And so the idea is sentiment grade is either very noisy, as in case in commodities, or very sporadic, as it is for equities. So the idea is that we have to filter out a more meaningful signal out of it, and preferably sort of continuous signal that gives us the state of the sentiment at any point in time, no matter whether there were news or not. Right, so what the idea is, basically, we can construct observed sentiment on some grid. So let's say on a 1 minute grid or 5 minute grid for commodities, or on 24-hour grid, where we just weigh all the sentiment, let's say for the previous 5 minutes or for the previous day, with some hyperbolically or exponentially decreasing weights, depending on what you believe, how people forget things. And the studies actually show that people remember 9 lightest articles. So there are psychological studies that say, 9 latest articles is what people remember. And we take care of that by taking 90% of weight on 9 latest articles. So that's how we adjust the weight. Plus, all these guys are weighted also by novelty and by relevance. Yeah, because you have to. And then we say that the actual market sentiment is unobserved and follows the so-called local level model of Durbin and Koopman. So this is the actual model. So it's a random walk and with some noise, but it's observed with noise. So we observe the unobserved sentiment with some noise, and we filter out the actual signal from the observed one. We call this local level news sentiment model. And so what does it look like? Well, this is the situation for a very infrequent, for rather illiquid stock. And you see what happens is that every time the news appears, the sentiment jumps and then it reverts to sort of neutral level, and the negative sentiment leads to those downward peaks. Yeah, so this is the output of such a model, for example, for a less liquid stock. For more liquid stock, my picture somehow got all scrambled up, so I can't show you that, but I can show you picture for a very liquid other asset, which is, for example, natural gas. And here, look, here we're looking at the net positive, so positive minus negative, which would be zero on average. And alternatively, you can look separately at positive and negative, and then the picture would look like this here. So you see, you have a lot of activity here. So every time when there is no news, the sentiment stays constant, or you can sort of let it go down to whatever average level. And then when news arrive, then the score goes up, and then it sort of goes. So this looks noisy, but this is nothing like as noisy as the original signal, where it's just completely impossible to scramble. So this is the running sentiment index for the natural gas. And again, you can do it in a different way. Look at positive, look at negative, look at net positive. But what turns out to be very, very useful is this thing here. And that is, we call it absolute sentiment. I don't like the name. Maybe we should call it like agreement or a disagreement. And it refers to the following situation. So suppose you have two news items. Both have positive score of 0.5, right? They're both positive with score 0.5. But the first one has neutral of 0.4 and negative 0.1. And the other one has neutral of 0.1 and negative 0.4. So which one is more positive? Well, the first one, of course, right? Because it's 50% like positive and 40% I don't know. Well, the other one is 50% positive and 40% negative, meaning I really don't know, right? So this measure here, which is the positive mean negative divided by 1 minus neutral, will naturally give, very high score, much higher score to the first situation than to the second situation. So it measures kind of an agreement or a disagreement. And for a single item, you can doubt the usability of it. But for this sort of filtering algorithm, it actually does give you a lot of idea about how agreed or disagreed market is about a sentiment at the particular point in time. Whether it's clear to everyone that things are positive now, or whether they look positive but people don't really know. So that turns out to be a very useful thing. We can also filter it out in exactly the same way as for positive and negative. And to be going a little bit ahead, this have a most explanatory power for all kinds of volatility models. Yeah? So that's another sort of interesting issue. So like I said, this is very much an overview talk, and I'm nearing the end, but I'm going to show you a couple of more things. So, I can tell you really loads of stuff about this. And so now the question is, what do you do with this filtered sentiment? Well, the first thing you can do, you can relate it to volatility, then you can relate it to jumps in the price, whether there is some causality with volatility, with jumps. But of course, what you can also do now, you can aggregate it across different assets. Just like you aggregate prices to come up with a price index, you can aggregate those guys to come up with a news sentiment index. And let me show you some of those. Right, so you can basically aggregate it according to the Dow Jones composition or Goldman Sachs commodity index. And you can, for example, take the weight in the news index the same as the weights in the price index, if that's what you desire, or you can choose your own weights. But interestingly enough, you can tailor-made such an index for you. You can say, I'm only interested in stocks in an energy sector. So you can combine the news about those guys into one index according to your weights. And that's actually something which Reuters is now considering doing, that you would just give what you are interested in, and they're gonna have it on your icon. And interestingly enough, another cool idea is to develop an app which you would construct your index. You say, okay, I'm interested in big industrial stocks, so I'll just look at Dow Jones. So I'm only interested in energy, I'm going to look at that. And so this thing is sort of moving on your icon according to this algorithm. And then every time it jumps, you can click and it takes you to the news item that generated that jump. Which means that you don't have to follow all the news, but something which clearly led to an upward or downward jump in a sentiment in your particular basket will then appear on your handheld device, for example, or on your icon screen. So that's actually quite nice. But anyway, so then for Goldman Sachs commodity index, so you can see it here. So this is 1 month averaged news sentiment. So it's still, you see, very, very noisy. It's sort of, it has some sort of relationship with the price index, which becomes much more apparent if you look at the S&P based. So this is the S&P price index, and the dotted line is the S&P news index. Yeah. So this is the semi-annually averaged. So you see that these guys really move for a large part very much together. And you can analyze all kinds of things with it. So for example, you can establish that they are indeed co-integrated, or that there is any kind of Granger causality. For example, volatility seems to be Granger caused by index like that. And you can show all kinds of index response functions on how price, volatility, and volume react to a unit change in the news index, for example, and vice versa. So see, that's one sort of cool application of this kind of stuff. Well, you can do all kinds of volatility things. You can augment volatility models with the news sentiment with different measures and discover that, for example, negative sentiment increases the volatility more than the positive sentiment, but the best explanatory factor is this disagreement measure that I introduced to you before. And you can do all kinds of risk management applications with it and so on. And there are other things you can do with it. I haven't even got time to show you. For example, now we are looking together with some other partners like Bank of America, Merrill Lynch, and others to see how the order execution can be improved. So what happens to the order book as news hits, positive and negative news appears, whether the book becomes, bigger on one side, on the other side. And the primary concern here is not making money, but when you do an order execution, maybe you should pull out when something comes into the news and continue your order execution at some point when the effect of news died out. And that turns out to be actually a very useful application, because they execute orders on behalf of their clients, which are usually quite big, which they split into chunks. And then this appearance of news can actually, screw up your execution. And then they actually devising algorithms, and we researching that and about how should we do that as there is positive and negative news. So what is the optimal order execution strategy? But anyway, so there is lots of it. Just another thing, here is some trading strategy application. So we have some index, again, novelty, relevance, and sentiment for oil. So when the index goes through some threshold, we buy, and when it goes through some threshold down, we sell. And this is not the price, but of course the news index. And it actually makes quite a nice amount of money. So for example, you can see here that it can generate you as much as like 80 bips per trade. And the average holding period would be only 3 hours. So this is actually, in commodities, you can do a lot. Also, even on the price level, which is impossible with equities. Sheer number of news items and also less sophistication of market participants make things like this positive there. Okay, so there is complex but very interesting relationship between news and asset prices. And we should study impact of news on many, many different market characteristics, and we should do it in many different ways. So for example, other things which I didn't even mention are clever algorithms such as neural nets, classification trees, and so on. And we can do all kinds of applications with it. And so you can look at some of my and my colleagues' SSRN papers, and here's a link to the interview with Reuters Insider, which was aired on CNBC a while back, where I kind of explain things similar to what I told you today. Thank you.
Okay, we hit the 4 o'clock mark. Let's just take at most one question.
I have a very brief
Yeah.
question. You said something that really captured my attention at some point, that there is some limitations by people in observing news, so they might ignore certain things that are relevant, right?
Yeah.
Today is a typical example because people are basically ignoring Greece, what's happening in Greece. So
Right.
The reason the stock market is falling apart completely, and it will be a very sad day for Greece. Will have an impact in the next week. It can spill over onto other European economies, but somehow it hasn't made it to the news. So why do you think this happens? From a systemic risk perspective, is this relevant? Why do people ignore things that are extremely relevant?
Well, I think it also, it's one of the reasons, okay, let me just tell you one more thing which doesn't tell you a question, but something illuminates it a little bit. So, for example, a lot of those offerings with news do not offer anything on sovereigns. Right, so which is of course it would be very interesting because there are bonds and there are foreign exchange, right? So when I talk to the guys from Reuters, so the head of news analytics, I say, why you don't do it? We need it, we want it. They say we don't want to touch it with a barge pole. We don't want to do anything with it, for reasons that you kind of can imagine what they are. However, other less prominent agencies, such as Ravenpack, of which almost nobody heard, they do this sort of, it's called events, yeah? But there is some sort of political sensitivity on which news agencies simply do not want to cover that, you know? And another reason for it, I think, is the picture which was way in the beginning, which shows that the positive news, in fact, for equities are having a bigger effect than the negative news. So it's almost like people deliberately trying to ignore this part and deliberately focus on the upper part. Well, for commodities, it's the opposite, right? So I think it's the behavioral characteristics of both central players, such as Reuters and Bloomberg, as well as individual investors, which generate this asymmetry, let me put it that way.
All these graphs do not have anything about causality, right?
No,
You show
nothing
the
at all.
prices moved before the news is released, so then why?
Yeah, but look, this is of course, if you look at it from the, for example, daily perspective, yeah, you can actually say that it is happening simultaneously because you look at end of the day news accumulation and the end of the day price. No, this is indeed more sort of high frequency, yeah.
So it really means there's no causality.
In this case, no. And that's why it's all not working.
I mean, I'm saying this because here, this is Cambridge, so Keynes was here somewhere. And I mean, if you look at his point of view on news and markets, it's irrelevant.
Well,
News
for
is
stocks,
not-
it seems to be relatively irrelevant.
Yeah.
It is true, yeah. But for bigger entities such as commodities, and I think sovereigns, they would much more be in the class of commodities.
Because there's a
There
physical
is a physical value, and there things would be very different, and that's what we see in commodities. And that's what would also happen if there were offering some sovereigns.
There's a physical value. Oil is actually a physical object.
Yeah, and
It's
same-
not in the air.
Not speaking.
It's the actual stuff, right? That you can. Yeah, and the same with countries. It has an actual creditworthiness of a certain big entity, which is tangible. Yeah. So I think this research has lots of behavioral aspects, which would be great to keep on, looking
You
at.
know, I think a very interesting example to analyze would be housing.
That it moves really slowly, doesn't it?
Yeah, but the good question is why does it move so slowly? It's not that nobody cares about it. There's lots of news about
Yeah.
housing prices.
And of course, nowadays it's possible with REITs, real estate funds, which trade all the time. So they give you some price
So, but
discovery
if you
now.
look at, for example, the Case-Shiller index, it actually started dipping before
The crisis.
the crisis hit the whole world. But nobody seemed to look at that because it's a thing some technical people looked at it. But then the outpour of news about this was much later.
Yeah.
So I never saw any analysis. Maybe you can.
Maybe that would be good too, yeah. Very regional though, wouldn't it be? While oil is a global commodity, so that's nice. Another thing, of course, here, which I didn't even mention, is that everything is in English, right? So, but there is, of course, millions of news in different other languages, which this doesn't cover at all. Russia, China, Brazil, India, you know. None of this is here. So everything is in English. So there's another way of looking at it, you know, rolling it out to different languages. Yeah.
All right, let's think about Svetlana.
Yeah, thanks very much.